So hello again to everybody. Welcome to another podcast of all things real estate Bay Area, where really we just talk about everything real estate related, not just in the Bay Area, but nationwide. I'm happy to have Jodie Hatano here. She is a loan officer with Golden One Credit Union. She's going to give us some useful information about interest rates in general and about what Golden One can do for you. So first of all, thank you for being here, Jodie. Thank you for your time.
Thank you, Ken, for inviting me. It's a pleasure, always.
Good. Now, I think everybody's already aware that interest rates are on the rise. We've been pretty lucky the last couple of years that mortgage rates actually dipped below 3%. That's a historic low. I mean, even if we think about 15 years ago, I mean, we were talking about, 5%, 6% mortgage rates. Mm-hmm. So we're still talking about good rates this year, but there are some indications, and it's already started, that interest rates are on the rise. The Fed has announced they're planning, something like 4 rates increases this year. So what do you expect to happen in 2022? I know we have to be careful about forecasts, but what is Golden One? What is your expectation? And really experts in general, what is their expectation for interest rates for this year?
Sure. Yeah, so definitely, I mean, anybody that turns the news on can tell just by the reports out that definitely interest rates are definitely on the rise. They've already started a lot sooner than we predicted. We weren't thinking that the Fed was going to act this quickly, this soon into the year, but it's happening. It started very early in January, and we're already seeing for conforming high balance loans that those rates are in the mid 3s. And the prediction from the different housing authorities out there range anywhere from, first quarter will end around 3.125 all the way up to 3.4 by Freddie Mac is predicting that, but we're already there.
We're already there, yeah. And I mean, a lot of experts were talking about at the beginning of the year, they were saying we'd be around 3.7 by the end of this year. And again, it seems we're going to be there in summer, basically. So
definitely.
What do you personally expect to happen by the end of this year, by around December of 2022?
So looking at the track that we're on right now, I believe that conforming high balance loans are going to be in the 4s. Wow. Hopefully, low 4s, but I think we're definitely going to hit 4 in those categories. Those conforming high balance really for the Bay Area, California, it's based on the county. So you can look it up. I've got a chart, of course, but for the most part, the maximum loan amount for conforming high balance is $970,800. So $970,800. If your loan amount falls in that range or below, then it's conforming. So you will have higher rates. That's going to be across the board, lender to lender. Fannie Mae and Freddie Mac announced that as of April 1st, they're going to be adding on 1/4 to 3/4 in pricing for all lenders. So that's going to translate to what I predict is putting us in the 4s by spring.
Right. Of course, normally when interest rates go up, that normally means home prices go down. I have a feeling, however, in the Bay Area, we're going to be in a situation where we have both rising interest rates and rising home prices, which means everyone's monthly payment is going to go up. So buyers really have to be careful about, what particular loan they choose to accept, because, it is going to be extra costs for them. What about Golden One? What can you guys do? What loan programs do you have? What typical interest rates are we seeing now for conforming and also for jumbo?
Sure. So jumbo, of course, would be anything 970, 801 and above. We do loans up, several $1 million. It's one-off kind of case-by-case basis, but we do up to $2 million, 10% down for jumbo, which is very, very aggressive pricing. Even there's no add-on to the first mortgage at 90% loan to value. Usually there is. The less money you put down, the higher the rate, but we don't add on to that. So right now, I'm still, 2.875, 3%.
Wow.
Ish APR about the same, 2.875, 3%. For those kind of loans, of course, credit score will play a factor, but sure. We our rates for jumbo are much better than conforming. We have a little bit more control over that. We're also offering right now a $2,000 lender credit on all of our purchase loans, which basically takes the loan to no fees to Golden One. And depending on the appraisal cost, you'll have about $1,005 left over to apply towards the appraisal or really any third-party fees. So we have a lot of really great offerings out there.
Yeah, no, and like you said, 10% down. I mean, we don't need to name names, but of course, a lot of the commercial banks out there are requiring, and even were requiring last year, minimum 20% down payment, which, it's not a bad idea to put down 20% on any house, but of course, especially in the Bay Area, that's not small money. I mean, for a home that's, $1 million, we're talking about $200,000.
Yeah,
so.
You're right, 100%. And the thing that's nice about what we do with that 10% down on jumbo is we give another 10% second mortgage.
Mm-hmm.
Back in the day, if you've been in this way before the meltdown, you knew the phrase 80-10-10, 80-15-5 even. So what we do is we're giving a home equity line of credit, even if you've got 20% down. Typically, people are going to take that line of credit, and it's a way you can pay it off and then instantly access that extra 10% of equity that you most likely will not be able to access anytime in the future. So it is definitely something that we offer. It helps people not have to cash in stock, create a taxable event if we can get away with it. Value comes in a little bit low, then we can come in with that second mortgage and help out so that overall the financial well-being of the client is, we're helping them not have to pay, cash in stock. We're not having to have them, have more taxes due.
Okay,
things like that. We have a lot of reasons behind it, but that's one that I think is important.
Okay, good. Yeah. One final question. I mean, we're kind of limited with time today. You are, again, representing a credit union, and a lot of people are kind of, find credit unions mysterious. I mean, we know the commercial banks, we know non-bank institutions, things like, Quicken Loan and those kind of rocket mortgages. And is it difficult to join a credit union? How does somebody do that?
It's actually very easy. Each credit union will have kind of their own rules, like USAA is for military families, no exceptions on that. For Golden One, our only requirement is that you're a resident of California, or there's a few other caveats to that where, you might have a family member here if you're, elsewhere and you join, on their account or something like that. But it's very easy. One of the benefits is becoming a member of a credit union actually means you're a part owner. That's how I like to look at it, because we don't have shareholders that we answer to. We're a nonprofit. So we're really, really focused more on community service and providing options out there for people and all sorts of financial accounts, savings, loans, things like that. But we really look towards the community. How can we serve you and offer lower rates, better customer service, and lower fees? I've been here for almost 2 years in March, and it's been by far one of the best moves I've ever made in my career. The whole culture is different, and I really, really like it. It is definitely, I'm not trying to be cheesy, but it does feel like family here. And I think that translates to our members' experiences as well.
Okay, good. All right. Well, thanks for your time. And of course, if anybody is interested, we definitely encourage you to reach out to Jodie. Her contact information will be in the post. I mean, no strings attached consultation. It's always a good idea when you're thinking about buying home to, reach out to several lenders for pre-approval. Definitely. And Jodie, be happy to hear from you. Okay.
Awesome. Thanks so much.
Thanks again. Thanks for your attending.
Take
care.
Okay.
Bye.
Bye.